Afternoon. How are we all doing? Good afternoon, Ian, Steve. Smash the like button. Hit the thumb. Afternoon, Julio, Rico, Virginia, Hanley, Gregors, Evil, David, Neo. I'm just trying to read. AI, Al, Lipo, Lippy. I can't even speak this afternoon. Brian, Gav, Matt, how we doing? Christian, day trader, hello, hello. Hello, hello, hello. Living the dream. Absolutely. Not at the moment. Huge moves. That news really shook the market up, didn't it? So just a quick recap on this morning. DAX was a nice clean break today for the SIH. Straight down to target. Stopped out in the second half, just over 1 hour. And then the news hit. 125 ADR there. FTSE, I'm still in at the moment. We got a hedge on this morning. So broke long, just shy of target. Not by much, but missed it. And then came down, hedged short. Came up, sat there for 2 hours. Ground down a bit, and then we've collapsed on the news. So aggressive drawdown control exit is just entered. I'm going to need to keep an eye on that. In fact, I might put a re-hedge on it now. I can't do maths. It's one of those days today. 6. Just because I can't actually pay attention to everything today. So just going to re-hedge it just in case it carries on pushing. So US indices this afternoon, we'll have a look at the news in a sec, but US indices, we've had a hell of a move. So up to you if you want to trade them. Quite often after we've had a move like this, the market is absolutely exhausted and we don't get an awful lot of movement. So sometimes, however, we get a V-shaped recovery and the market undoes the entire move when New York opens. Sometimes it does, sometimes it doesn't. So, but the market's obviously had a hell of a move today. So these ranges that we've got pre-market at the moment are absolutely huge. It doesn't look big, but that is 120 pips. 20% of the ADR is 71. So that's much larger than normal movement. Obviously, we're experiencing off the back of the news. We're 150 ADR on the S&P, 100 ADR on the Dow, and approaching 150 on the NASDAQ. So up to you if you want to trade them. Personally, I'm not trading them this afternoon, just because we often find the market is just exhausted and it just sits around doing this, or it grinds. So I'm just going to knock it on the head this afternoon and leave them. Had a fairly decent morning on the DAX. The FTSE may well play out, may not. We'll see what happens. But we'll watch them and we'll see what happens to them. But I'm not actually going to trade them this afternoon. So we've got 2 minutes to the open. That news we've just had has really shaken the market up. CPI went up. We were forecasting a drop of 0.5%. We still got a drop. So it's still good news. It means that the inflation figures coming down, which means interest rates can come down, but not as far as they thought it was going to. And month on month, they didn't think it was going to shift, and it's ticked up. So that means that short-term CPI is growing rather than staying stable, which is not what they want. So it means potentially they may delay the rate increase further. The pound also, this morning, we had the claimant count better than forecast ever so slightly. But the pound, they came out this morning and also said, we may push it back. Or rather, traders have factored in that they may push it back. So this is all kind of medium, short-term bullish for pound and for the US. So lower odds of May to June rate cuts. Fed will cut rates in June after that inflation data. So we were looking at April. Then they said May. Now futures are pricing in June, going back and back and back. As long as that number stays like that, we're not going down. There is still a possibility of an uptick, but highly unlikely. So less than 1% drop now in 2024 is what the Fed of the swaps are forecasting now, what the futures market is basically predicting. Traders are also pushed back the first quarter point rate hike on the rate drop on the pound to September from August. We were originally talking June, July. They pushed it back to August. Now it's been pushed back to September. So that's gone back, bullish pound. So yeah, it's all kind of, the data's not supporting what the market wants. So obviously that's why we've got that reaction today. This is obviously a knee-jerk reaction. So when you get news that is fully unexpected, the market has factored in, pre-market, they factor in what they're expecting to happen on the news. When they don't get what they're expecting, they need to quickly unwind positions or add positions if they're shortfall on whatever they were forecasting the price to get to, which is why we get these big spikes. And they are often a short-term reaction. So what we get is that and then an undoing. Yeah. So it's what we call a V-shape or an A-shape recovery, depending on obviously whether it's bullish or bearish move. However, obviously you do get fundamental shifts, which the market then goes, yeah, actually we were quite a long way short, and it continues to run. So this move we've got happening could be that. We'll have to wait and see. So we're either going to get an unwind today and an A-shaped recovery on this, and then the market will decide what to do later. Depends on how it's reacted. Or it will be a continuation rally. So we'll see what happens. But either way, that's not what the market was expecting today. So pound, big strong moves. You can see the RSIs, a lot of it RSI extension. You can see from the ADR dashboard, big moves on ADR. So Euro Swiss 125, big move there on the Swiss franc because of the Swiss franc news as well. So we've had the Swissy. Yesterday, Tuesday. That's today, this morning, sorry. The Swissy this morning, that was a 0.2. So they were forecasting their CPI to go up, and it actually only went up 0.2. They're expecting a 0.6. So massive move on the Swiss franc. So all this news we've had, and then we've got the CPI coming tomorrow for the pound as well. If that is a miss, it's going to be chaos. So a lot of potential movement. Could be long-term, could be short-term. We'll have to wait and see. But yeah, big moves today, especially on the ADRs. So Swiss franc is the main mover today. Big moves there. Euro Swiss, I've taken some off of the Euro Swiss this morning. So I had two positions there. This was a manual. This one was taken by the EA. So I took my manual one off because I had double the exposure on at that level. So I've just done some drawdown control on that because I had too much size on it. But yeah, so big moves. Let's quickly look at what the market's done at the open. So there's your pre-market ranges. 48. So that would have been a trade on the Dow, which looks like that would have hedged. NASDAQ pre-market range 30. That's flipped. That's gone short, and it's a hedge on the S&P. So this is kind of what I was expecting. After a move like this, the market hasn't got any volume at the open. There's no, that initial cash balance that comes in is done. We've had it. So at the open, there's just normal order flow, which is not directional. So you tend to get these whippy continuation moves. So good call today. But we'll see what happens. It could go either way. So FTSE thinking it might go long, but we'll see what happens on that one. Yeah, so big moves. We'll have a look at all that in a minute. We'll just wait for this to sort of open, and then we can see where everything's going there. Afternoon, Bartek, Lucho. US dollar yen skyrocket. Yep. Thanks for subscribing, Mojmir. I'm aboard. Evans, morning, afternoon even. Amy, Mark, Florian, Johannes, how we doing? So, yeah, you got your NASDAQ. It's going to be difficult to get candlesticks on the chart today because obviously this whacking great move is throwing everything out. All looks a bit weird. So there's your 5-minute opening range. Your 5-minute ORB is 54. So that is over range. If you took the pre-market, you're short on the NASDAQ. The ORB is a bit big. ORB 71, that's just about there for the opening range breakout if you took that one rather than the pre-market on the Dow. Same with the S&P, just about where it should be. So, but that's a hedge. So you will definitely be hedged if you took the pre-market on the S&P. Short at the moment there. Shorts potentially hedged depending on the spread on the Dow. So not a pretty open at all. There would be a sec. Okay. So we look like we're going long S&P. NASDAQ's trying to break long. Dow stuck. FTSE's pushing up. Thinking about it. John would know. John would know which way it's going. John always knows which way it's going. One or the other. Or John's thumb. Look. Not even sure if that is a thumb. One or the other, isn't it? Thumb or a finger. You said when US dollar yen is over 150, they push the price down. No. How does it work? All of that, if you can explain. Not sure what you mean, Luke Joe. I don't remember saying if US dollar yen is over 150, they push the price down. Do you mean ADR? Yeah, so 150. Sorry, you've been talking about price. Yeah. So so basically with the US dollar yen, we are now over that magic 150 level, which is basically the kind of line in the sand that's been drawn by the Japanese in the past for intervention. So probably daily's the easiest thing to look at. So this 150 level, as you can see, isn't an area that we get to very often. Yeah. So back here in 1998, we hit the 150 level and we bounced straight away pretty much from it. It was just shy of 150, but we dropped away from that 150 level. Since then, we haven't hit it. Every time we've got close to that level, and it tends to be around about 145, the Japanese start saying, we're not happy with you being up here. If you get any further, we're going to intervene. So what they do is they tend to scream and shout from 145 to 150. And if the market continues pushing or devaluing the yen above that level, they do an intervention move. So you've got 3 intervention moves on the chart here from the previous time it happened back in September 2020. That one there, which is around about 600% of ADR. That one there, which is about 800% of ADR. And then that one there, which is around about 800, 900% of ADR as well. So these are the moves. So these moves tend to happen usually within about an hour. You go from the top to the bottom, literally, whoom. So they basically liquidate overseas assets because the inflation interest rate in Japan is a negative number. It's negative 0.1. There's no point in holding currency in the Japanese yen. So everybody invests overseas, which means that if you are buying overseas, you are converting yen into US dollar, into pound, into euro, etc., which means that the yen is not very strong. However, at any point, you could liquidate all those overseas assets, bring them back into Japan, which means that the Japanese yen suddenly skyrockets. That's what an intervention move is. They basically manipulate the yen by buying a load of yen, if you like. So we get these huge, strong moves down. That is the 145 level. That's the last time the Japanese said, if you carry on going, we're going to kick you. The market reacted. Then they pushed back up again, got back to that level, and they started screaming and shouting again. So then we had another intervention put in there. Then we had another intervention. The smaller one, wasn't it? There's somewhere. This might have been the first one, somewhere in there. And then we had that big one there, which was not anywhere near as big as the previous levels. And then obviously the market gets to that 150 level and does what it's told. We're back there. So this area is basically, it's not very cost effective for the Japanese to transact with the US when this currency gets above the 150 level. It's not very economical. So basically, Japan exports tons and tons and tons of goods to the West, US being the main customer. If the US dollar yen conversion rate gets to a certain point, it's not economical to buy the parts, manufacture the goods, and then ship them overseas. Therefore, there's no point in doing it. So what the Japanese basically say is, keep pushing it if you want to, we'll just stop supplying you. Then everyone turns around and goes, but I want an iPhone. They go, drop the price. Then it comes back down again. So this is historically a level which we get the reactions at. And we're back here again. However, the fundamentals have just shifted for the US. So what we're looking for on Financial Juice is indication from Japan, and I would say it's a 50-50 shot. I come on tomorrow morning, go through the news and go, hey, look, Suzuki has just said we are watching closely FX movement. We are not happy with the FX movement, the speed of movement. Any undesirable movement in FX will be met with blah, 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 blah. They come out and they basically say, stop it. If you don't stop it, we will intervene, is basically what they're saying. Although they come out every time they do it and say, we didn't intervene, it wasn't us. So that's what we look for when we get to these sorts of levels. And that is where we've hit today again. So this is the, obviously, kind of your all-time high, if you like, 151.80 odd. Yeah, not coincidence. And that was the intervention move. That was the 800 percenter. So imagine a move of that magnitude, which is 650 pips. So this was actually in today's ADR. This is 6.5 ADR. So imagine, yeah, all of a sudden the candlestick going in 6 ADR from where we are here. Yeah, that's what you'd be looking at. In an hour, you'd be down there. So that's potentially, but we need to wait and hear the Japanese first of all say it. They don't usually do it without telling us. They usually warn, because obviously they want the banks to know that it's coming, because if you're the wrong way on this, when it happens, you're in deep doo-doo, massive doo-doo. You don't have time to react. It's equivalent to a black swan event, but it's only 6 ADR. So well, that's what it has been. We don't know what it would be. But if you look at that move there, for example, that's a day, 1 day. Yeah, that was a huge move as well. That was 570. But, you know, that's the sort of thing you'll be looking at. But you'll see it come up here. I will mention it basically because I obviously scan this every day, twice a day, 3 times a day. So I will spot that, and it's always highlighted in red. Every time it happens, you will find it in there. So we need to keep our eyes peeled. But we're getting to that level now. So we'll see if the US can sustain this rally, but it's not going to be easy. So stopped out of all my yens today. So the pound yen aggressive drawdown control, second attempt, failed. Taking another one, looks like this is going to fail as well. So I'm getting absolutely stuffed this month. It's not going to be a profitable month, unfortunately. Nothing I can do about it. Can't. These yens are just totally out of control. What will happen is, and what usually happens is, you get to a point where you go, I can't stand this anymore, and you shut 50% of the position out. So I just go, no, can't do it. So I was sitting in 6 or 7% of drawdown. I'll shut 3.5% of it out and go, right, reset. Day after, that usually happens. And you sit there and you go, oh, shouldn't have shut it. Because you're so extended without a decent profit take move. You know, we're looking for that. So you look at this last one. Out on that aggressive. But this is still the same position I'm in from back in January. It hasn't let up. That was not enough to get out, unfortunately. Just shy. There was a break even, basically, but I didn't take it because it looked like we were double top coming down. Japanese were saying, yeah, no problem. We're going to increase the interest rates. Since they said that, not a word. These are the times you think, not trading the yen anymore. And also the swaps it costs you is a ridiculous thing to trade, isn't it? But anyway, what are the settings on your color ribbon? Bear with me 1 sec. So my machine over here is just go slow. So if this is all covered on the website, so if you just go into indicators, other indicators and template, moving average in color, moving average color filled, moving average filled is on there. So you can download that. But all the settings I have, I've got the 144 period and the 432 period. So this represents the 72 moving average on the daily, and this represents the 24 moving average on the daily. So if you got to the daily, it's the 24 and the 72. It's all covered in the bootcamp, what they are, why they're used, etc. So, right. Okay, re-hedged on the FTSE. Market is a pain in the arse today. Just going to leave that hedged. I'm 125 up on the DAX. It's like a $30-40 loss. I really don't know if this is going to be a continuation today, so I'm going to leave it as it is for the minute. So the US, let's look at what the US is up to. Not a lot. So the Dow's come out the lows, 1R. No movement on the S&P, no movement on the NASDAQ. Ever so slightly pushed out the highs, that's all. But the Dow coming down still. Look at that Dow. That's a mental move. Look at it. 100 people watching. It's only 99 now. Let's see how many likes we've got. 37. Come on. Hit those thumbs, people. Right. So let's have a look at the FX side of things. Might survive that yen, you know. Gonna be tight. So big moves today. The account that I set up over here as well. Guess what? Second margin call of the day. Yeah, definitely picked the wrong day to start an aggressive 10% risk account, didn't I? So been margin called twice, basically. I was up 12% at one point this morning. And then, as you can see, margin called again. stopped out. So, yeah, annoying, but never mind. So only $100 down. It's not the end of the world, but double margin call. So definitely can't run 10% risk over one ADR on M15, M1. Going to have to drop the risk down to 5%, which means targeting 2.5%, which isn't what I wanted to do. I'm still not sure whether this is just an anomaly day. This day is, we've had ADRs, RSIs today on the 15-minute time frame. If you look at RSI, normal RSI movement, we don't get very many opportunities above these levels. And obviously today it's been off the charts. So I think I've just started this on totally the wrong day. We've had the Swiss franc, the pound, and the US all put in totally over the top ADR moves today, which is just not normal. So I think I've just started it on the wrong day because I did the back testing on it, and there were very few instances where it got overextended without going over 10% drawdown on an individual instrument. But obviously today it's got into about 20 trades. Normally you take 2 to 3 a month. It's done 20 odd today in one day. So I don't know whether or not to believe this is real or it's just an anomaly. But anyway, it was the wrong day to start it. These are the days like when you're on prop, when you're trading prop. These are the days where you blow your account in one day. And then you'll have another day where you'll hit target in one day. What can you do? So, yeah, I'm just going to leave that running today and just see if I can grab that 10% back. It's not going to take much. It's just going to take a pullback. There's 5, 10, 15, 20, 25, 30, 35, 40% net there, which will take me up to 30% plus for the day. If these trades turn tail and run, which obviously we'll have to wait and see. But anywho, started that account this morning. Wrong day. Afternoon, Max. I don't understand these margin calls. Aren't you supposed to be in 80% drawdown before they start closing positions? Yep. What I was. The margin. 280%. Yeah. So I'm in 230. I've got 235% of margin available. Yeah. So with all the positions on, that went below 100% margin. Margin call, shut. This is with 300%. But don't forget, these are taking 10% risk over one ADR. Yeah. Look at the ADRs we've had today. 175% of ADR. Yeah. This has moved 175% of its normal average range. So's that. That's moved 150. That's moved 150. That's moved 150. That's moved. How often do we get days like this? Once a month? Maybe. Just happened to be the day I decided to whack a 10% account up. So, nothing you can do. Just totally bad timing. Have you considered ITC markets 1 to 1,000 leverage? Don't need it on a normal day. So basically, what's happened here is I've lost $100. If I'd have used a 1 to 1,000 account, what would I have lost? $1,000. What would I rather use? This one. Days like this saves your ass. That's what it's there for. Using stop losses, or you're using a strategy which is high risk like this, you don't want to be in 1,000 leverage. What if that candle on the US dollar Swiss? Yeah. What if you were at 80% margin call there and that happened and they stopped you out there? You'd owe them money. You would need to pay them extra money because they wouldn't have honored your stop at the right level. Got to be careful when you're using high leverage and high risk. I've been backtesting M15, M1 RSI this morning on EU. Blew a couple of accounts using 2% and 1%. Currently testing 0.5% risk. Yeah, it will do. Don't forget, this account is not here to be a consistently profitable account is here to attempt to double it to 2,000 as fast as possible. I need one day where it gets into 5 or 6 trades, well, 10 trades, say, and all those trades just play out to half of an ADR. That's all I'm looking for. 2 days like that, you've doubled your account. This isn't to make money. This is to prove that compounding, well, I will do the video when the account's finished, but this is to prove that compounding works because everybody keeps telling me it does. I'm going to prove you wrong. Compounding blows your account, 100% guaranteed. Even the guy that sells the course with the blue Porsche tells you in the course, he will blow your account, which is why there's only $1,000 in here, because I'm happy to lose $1,000 to prove a point. But if I can make $1,000 to prove a point before I lose the $1,000, I come out break even. That's what I was kind of hoping, but obviously picked the wrong bloody day to do it, didn't I? Anyway, we'll have a look at that at a later stage. Put another 500 in the account. No thanks. You give me 500 and I'll put it in there for you to cover the account that I'm guaranteeing you 99.9% sure is going to blow. You give me 500 of your money to put in there. The above was using 1 to 100 leverage. Yeah, but it blew the account, didn't it? It didn't get margin called. It blew the account. Euro odd, ADR. There's no point in going through these today, is there? Everything's at ADR. Everything's RSI extended. There's potentially the stuff to mean revert, or it's going to continue to rally. That's pretty much the analysis today, isn't it? Got to wait for this market to calm down. It's just, it's off the charts at the minute. There's no idea where anything's going to go. This US dollar ain't stopping. US dollar CAD approaching over 175, approaching 200. Yeah, this column, these two columns, very rare. Very rare to get there. So this is a fundamental shift going on potentially at the minute. Let's see where we go. Would you be so kind as to code a 3-bar reversal into the EA? No. I've tried it. It's exactly the same as a moving average cross. The 3-bar reversal basically, I've already built it and I've unbuilt it. I built it in and I unbuilt it because basically all you're doing is grid trading. If you wait for a 3-bar reversal, and also you need a definition of the 3-bar reversal, yeah? So a 3-bar reversal like that as your entry signal may happen once or twice a week. So are you saying that you don't want to get in because there isn't one of those? Doesn't work that way. So a 3-bar reversal, what you've got to do is choose a candlestick, another candlestick, and another candlestick that breaks the low of that previous one. Yeah. That will also be the same as a moving average cross. It's exactly the same signal. Because the market has pushed, paused, and pulled. So the moving average has gone with it, slowed down, and you've crossed it. Has the same effect, pretty much. But you'll often find that that may well get you in before a moving average cross, and then price will disappear off and continue in its merry direction. Don't forget, this candlestick pattern, H1, H4 and above, any time frame lower than that, not reliable. So you can get it easy. If you want to code something into yourself to trade it and test it, do so. I've tested it. I'm not using it. It's too aggressive. I couldn't make it. It gets you in too often. You might as well just grid trade because the type of candlestick pattern. There's a 3-bar reverse. There's 3-bar reversals all over the screen. Yeah, is that a 3-bar reversal? No, but I'll tell you what is that. Those 3 candlesticks there, because that low is lower than that low, is a 3-bar reversal. Yeah, look what happened after it. It's not reliable. The way it's reliable is when you see the pattern, when you see the pull, pause, push. That is reliable. To code that, there are 100 ways that thing could play out. 100 ways. that this, what's the size of that candle got to be? What's the size of that candle be? What's the size of that wick need to be? How big does that candle need to be? Does it need to be a bullish engulfing? Does it need to close above there? What about the wick? Should that be higher than that? It's a completely discretionary candlestick pattern. And there is a way to code it, but that's a 3-bar reversal. Push, pause, pull. Would you have taken that? Technically, that is a 3-bar reversal. Bull candle, doji, bear candle. 3-bar reversal. Did it work? Ever so slightly. Maybe yes. Don't know. Do you know what I mean? It's just too unreliable. It really doesn't matter which you use either. Dow just went crazy, did it? Yeah, so push down on the Dow. Glad I hedged that. 125 on the FTSE. Yeah, so Dow's pushing down. S&P's, look at this. Look at the divergence across these indices today. Huge push down, 150 ADR. We're pushing up on the NASDAQ. We're pushing down on the S&P. Market's in an absolute mess. Turmoil. Doesn't know which way it's going today. But it does open more opportunity because you can do, for example, 3-bar reversal H1 entries with a moving average filter. You could do, yeah. You can build an EA to do what you like. The EA that I'm building is not that. The EA I'm building is a position trading EA to trade my strategies. But you could build that, certainly. So it's a brilliant candlestick pattern, but how do you, this is what I was saying, how do you detect it? That one is one. That one is one. Technically, that is one. Yeah. There's 3 on that screen, but they're all very different. But they are still 3-bar reversal patterns. The amount of code to get every combination of it is too much. In the H1N5 strategy, you open the position when the RSI is extreme and the market reversal alerts. Yeah. The second position, only a reversal alert has to come, or do you need H1 RSI? No, there's no RSI. Go and watch the Bootcamp, Max. It's all explained in there how position trading works, or how I trade position trading. At the start of the year, up at 12K into an account position trading in line with the trend. Up 18%. Very nice. Good job. If you look at the US dollar yen on the 5-minute chart, it's the propulsion gap. If price comes back and just taps it slightly, is that gap deemed to have been filled? On the 5-minute chart. So to fill that gap, price has to return to the origin of the move. Yeah. So this is the gap. Yeah. To fill it, you've got to fill it. You've got to go all the way back to there. If it hits that, it's just bouncing off the higher the propulsion, isn't it? Or if it comes out the middle, it's just this area is buyers, nothing but buyers. So at any point in that gap, if the buyers want the US dollar yen to continue to rally, they will add to their position. Where they add to it will depend on the volume of sellers that comes in and how strong they are at pushing them back out again. It's just volume of orders. If 100 million comes in and they've got 200 million additional orders, it's just going to bounce out. If 100 million comes in and they've got 50 million sitting there, the gap's going to fill. We have no way of determining how much money is sitting in there and how much is going to come back down towards it. Yeah. Right. We just had all this speculation. This is the thing with the, you've heard the term buy the rumor, sell the news. Yeah. Or buy the news, sell the rumor. The person that came up with buy the rumor, sell the news was obviously just doing that. But the opposite is also true. We've just had the Fed swaps shift one way back to July from June. Yeah. The Fed could come out, any talking head from the Fed could come out this afternoon and say, we're very surprised at this reaction. We haven't said anything about changing the interest rate. drop. As far as we're concerned, this CPI bounce is good news, and we will continue to watch the data. The entire move will undo because this is speculative move based on that CPI number. We're waiting for the Fed to confirm what they think about it. This is what the market thinks about it. One talking head coming out, Powell, saying, I don't know what the hell you lot are doing. We're certainly not interested in changing anything. We're back down there and probably much further down. So, got to, and that it will determine how much volume comes into this area as to whether or not it bounces or not. And it's the speed it comes in at. It will just overwhelm the buyers that have bought this. And these buyers that have bought this, have bought it in the anticipation that the Fed are going to back up what they think. If the Fed change their mind, as soon as it hits this level, all the buyers that have gone long here will just flip short and power that move back down again. But you're not going to know that until it happens. So if we knew that, we would do it, wouldn't we? The only difference is, no, I've already read that one. From experience on H1 and higher, if you have 4 or 5 candles in one direction followed by a 3-bar reversal, it's super reliable. Yeah. It's the same. A 3-bar reversal is exactly the same as a shooting star or a hammer. Yeah. Shooting stars and hammers are utterly useless in here. Look at that. Utterly useless. That shooting star is a bearish price action candlestick. Yeah. What happened afterwards? It went up. Yeah. So if you see a shooting star or a hammer in the middle of price action, it's irrelevant. A shooting star that appears after a rally, highly relevant, because the buyers have run out of steam. The sellers have overwhelmed them and taken control of the market. A hammer is where we've moved down. The sellers have lost control of the market. The buyers have regained control and we push back up again. Same with the 3-bar reversal. Market pushes up. You get a big, strong rally. The market then pauses and the bears take control. That is exactly the same as what? So let's say this is H1. Right? What will you see on H4 in those 3 hours? Yeah. All this is a shooting star on a higher time frame played out on a lower time frame, which is why it's so reliable. But it has to appear at the top of a move or the bottom of a move. Again, try and program that. How many candlesticks up should you have before you see the pattern? 3, 2, 4. Should they be big, strong? Should they be just bullish? Should they be bullish and don't mind the odd bearish one in between it, as long as it's happened for 6 candles in a row, but one of them might be wrong? There's 1,000 variants. This is why you have to watch the charts. Coding stuff is really simple, but you'll soon discover, if ever you did get stuff coded, there's 1,000 different variations of exactly the same thing happening on a chart, and not 2 of them are going to be the same ever. So you can't say I need 3 bullish candlesticks followed by a shooting star. That might happen once a month. And the odds of that working are still 50-50. But if you are less reliable, less defined by how many candlesticks have got to be going before it, or whether they're bullish or bearish candlesticks, and you get a move which is above 3/4 of an ADR on an individual day, and an hourly shooting star appears, that's been moving up. So maybe pick half an ADR to a 3/4 ADR move on the day, and then take a pattern from that level. That's something you could try. There's 1,000 ways to do the same thing. Will the new EA have an option for trend trading? Nope. It's for position trading. The Market Reversal Alerts EA does everything. I'm looking to simplify it because I don't use it in that way. I don't use it for trend. It already does trend. You don't need the new one. If you're using trend, the Market Reversal Alerts EA does everything you need. You don't need anything different. 94 watching. How many likes? Not enough. I guarantee it. 53. That's more than half, which is good. means half of you like me. That's right. Pin bar. Yeah, pin bar, shooting star, hammer. It's all the same thing. Different words for the same thing, as we know. 150 ADR now. 150 ADR on the S&P. We've hit 150 on the NASDAQ as well. So market absolutely shot today. They are not happy. So we'll see if we can get that tomorrow. So tomorrow's news, basically, we've got the CPI in for the pound in the morning, and then Bailey speaking tomorrow afternoon. That'll be an interesting one. And then we've got to wait until Thursday afternoon for news, which is the unemployment and retail. So that's your first potential for a reversal pattern to happen if they don't do it today. So we'll wait and see. But there's RSIs and ADRs all over the place. So until this thing's calmed down, there's just no point. 200% ADR. There we go. First time this year we've had 200 ADR, I think. US dollar CAD and US dollar Swiss, both huge. It's just those extended MRAs that take a big move that feel I dislike about the MRA EA. But this is the thing, though, David. Those extended market reversal alerts save your skin a lot of the time. So, you know, we say, you know, it's a downside. You get a strong move in one direction, then it does that for 2 or 3 hours. And then you get the reversal alert, half an ADR away from where it was. Yeah. And then price just does that. And you're thinking, ugh, I should have got in up there. But then what also happens is price pushes up like that, comes back down, hits that, and then goes up, and you go, oh, thank God, that half an ADR was there on that reversal alert. Otherwise, I would have got in short. I just saved myself a load of drawdown. Which one's right? If you got in with a moving average crossover up there and it went like that, you'd still be as annoyed as if you got in with a moving average and it went like that. You'd actually be in worse with that than you would with that. But sometimes that moving average cross is better than the reversal alert. There is no right or wrong, is there? It doesn't matter. For me, I just want to simplify the whole thing down. That's all I'm doing. So I can add a moving average filter, but the more I add in, the more slowly everything will play out. So in the strategy tester at the moment, it's I don't know how I've got this set up. It's not too bad. That's the speed of it. Yeah, compare that to the market reversal alert CA. It's hugely massive improvement in speed. Absolutely huge improvement in speed. But if I start adding in moving average filters, this, that, 3-bar reversal options, the code just gets longer and longer and longer and longer. And every single tick, you're now doing, like, the difference in one tick happening between processing 10,000 lines of code and 30,000 lines of code is 3 times the speed. That's literally what it is. So there's lots of ways to speed up and slow stuff down, but it's just I don't want to put too much into it. Otherwise, we're just going to get what we've got. You know what I mean? Take this day back a year, and I would have blown my account now. Well, hopefully you haven't. Thinking I might go 0.2% risk on H1M5. Weirdly, I think I could reduce the number of trades per position because you need less movement to get out. Yeah, I mean, this is the trouble at the moment with H1M5. It's in massive drawdown at the minute. But I've taken 2 aggressive drawdown controls off this morning, which has basically wiped the month out, which is fine. I'm not bothered about that. But what I am bothered about is the yen, basically, which is the problem at the moment. So 10.5% of that is the yen. It's just stuck, isn't it? And we've been stuck on it for ages. And we've just had the two main currencies I'm in drawdown on push their interest rates back further, potentially, which is going to make them bullish. So I might have to just cut this. This is what I was saying earlier. When you get into this situation, and there's nothing you can do about it, this is when you get the losing month. Basically, you know, the losing months I have every now and again, this is it. You can't do anything about it. So what tends to happen is I'll cut half of that and go, knock 3% off of that. I'll knock 2% off of that, 2.5% off of that, take a 5.5% loss and go losing month. Literally the next day or the day after, the Japanese will intervene and it'll be down here. And I'll be going, for Christ's sake, I took 5.5% loss and I got out of those with break even. Virtually every time. Because it is so extended and it's a squeeze, you know, it's just one of those things. But if you take higher risk though, you'd be in 30% drawdown now on that AZ. Yeah. I'm in 15.5% of drawdown. You'd be in 30. As long as you're happy with that. It's a bit too high for me. Uncomfortable high. 10, 15%. That's when I start thinking I've got to start chopping some of this. But normally, obviously, there's 5 to 15% in there before this happens. So it's just this month has just been unprofitable. We haven't been able to generate any alpha this month because the market has just been flatline sideways. Just literally had no movement. And now we've had that. So hopefully we're not going to get another retest situation. But we will see. But we're above that level now. So we'll wait and see what happens with the yen tomorrow. Overnight, we may well find Suzuki or Ueda coming out and saying, this is not desirable. We're not happy. And that might scare the market into doing a little bit of an about turn. Afternoon, Pappy. If we're going to add a moving average filter, I'd reduce the RSI level down to 70.65. Yeah, so that's what the, if you look at the strategy, it's already on the website, the strategy. You can trade it with the market reverse alerts EA now. It's a trend pullback. Website always does this. There we go. So basically, you can use any level of RSI that you want to, or not. You don't have to use an RSI. So there's many ways to trade it, but as you're basically just staying in line with the trend. And obviously, the only downside to using an RSI with this strategy is when you're in a trend, you quite often don't get strong enough pullbacks to get you extended on RSI. So using an RSI filter, you'd have to keep it fairly low, like you say, about 65, 60 maybe. Because we're looking just basically for, you're going to get a lot of flag breaks. Not very good flag break, is it? In a trend. And these flag breaks won't get you an RSI extension because they're not strong enough. It's not a pullback. It's a kind of upward sideways type of move. So you're better off not using an RSI. I don't think this set file does use an RSI. Not on the lower time frame. So it uses the H4 70 or 80. So it only uses the higher time frame RSI. So yeah, it's already there. MRA does it already, so you can just use that for trend-based stuff. I'm on a trip when CPI news came out. Set my TPs beforehand, and 5 pips before my stop loss, it crashed down to Euro US dollar. Luckily, it crashed down on Euro US dollar. Yeah, Euro US dollar was a weird one today. We had 125% ADR put in on one candlestick on M5. Not seen that before. That really confused the EA. It started taking trades in the opposite direction, but not on the opposite direction. It took them in the right direction because we had, I put it in the Telegram channel. We had a high made, and then it broke its own structure after making a high with an ADR move in the opposite direction. Just totally abnormal move. We just don't get that normally. It's crazy moves. Euro CAD 125 is still coming in. So tempting just to jump on short with a lot of money on these and get out fast. Credit card debt jumped 15% last quarter. Yeah, cost of living wouldn't surprise me at all. Another firm came across the board, apparently regulated and uses MetaTrader and accepts US customers. Run from a former Wall Street employee. Bit of a tool came across my YouTube feed. Funding traders. Yeah, I've seen this logo before. Another prop firm. Money makes money. If he's out of Wall Street, he's got money. Still selling you a demo account, though. I don't think you'd be in 30% drawdown because you'd exit some of those positions earlier. You might do. Test it. Today's fake numbers did a whammy on gold, dropped 420. Yeah, well, gold is just a US dollar cross. So if US dollar goes up, gold goes down. US dollar goes down, gold goes up. It's just a US dollar cross like everything else. So yeah, you will have had a massive drop on gold. So jump on the opposite direction. Mean revert it. So let's see if I got stopped out of that pound yen. Not yet, just about to stop out on that. So that's going to be another 0.5% loss, 0.76% loss, 0.5% down on the month. I will still have a go at another aggressive on this. The problem we've got now with this pound yen specifically is we are out in all-time highs. So it's very hard to pick a turning point in this now because you haven't got one. It's reliant on the Japanese basically powering up, and that is going to happen off the back of this. So we have got 151, so 225 ADR away. We've got that level, but we are in that sort of danger zone now where the Japanese are going to start kicking back. So this is why I'm reluctant to get out of these yens, although they're in big drawdown at the moment. At any moment, these could be in huge profit. Huge profit. You know, think 600% of ADR. We're down here in an hour if they decide to press that button, and they have many times. We've seen it. There's one there, look. Intervention. That was the minor intervention, wasn't it? That was the other one I was looking for. Yeah. And look at where that happened. Look, it's not a coincidence. Look, 150. They warned us at 145. Yeah. They warned us again. They warned us again. They said, oi, that was the mini one, wasn't it? That was the mini one. They said, if you do not stop, we will stop you. Like clockwork, 150. Bang. Hit it. That was a tiny one, wasn't it? That was 3 ADR in 5 minutes. And then obviously that's where we kicked. The market kicked back and said, yep, you're right. So hopefully, but we need some noise tonight out of Japan. So I'm going to hold these overnight, and we'll see if Japan says anything overnight. And if they do, I think this market will suddenly start to slow and potentially turn around. So the yen has to take some action soon, yeah. The US can only threaten them with their earthquake machine for so long. Do you reckon they've got an earthquake machine that causes the tsunamis? That's a conspiracy theory. Wouldn't surprise me either. Markets are pushing up. I'm just getting out the footsie there. Trying another long. Re-hedge under there, just in case. So everything's starting to retrace back up now, as you can see. So NASDAQ's gone first from 150 ADR. We're starting the pullbacks here. So these pullbacks will all be starting opposite direction on the US dollar pairs. So we'll start to get some retracements coming into play on these. So if you do want to get in things like this US dollar yen, this is where you take the aggressive. There's my sell stop. Look, this is where you take the aggressive moves. If they are going to undo this and it is just going to be an A-shaped recovery and the market's totally overreacted, this could be where we just do the move from. So, Wayne, I think, what about the earthquake machine? God, wouldn't that be a find? Somebody's found an earthquake machine off the coast of Japan. I wouldn't put it past them. How would H1 hedging look with an MA filter? You can't hedge with an MA filter, can you? You're using a moving average filter. You're only taking trades in one direction. You're filtering the trades. The whole purpose of hedging is you take at both directions because you don't know which way the market's going. That is what hedging is. That doesn't make sense. That's like saying, I'm going to go... I don't know what that's like saying. But it's basically the opposite of what hedging is. Using a filter is filtering out trades. So that's directional, isn't it? It's like saying with the stock index hedge or the opening range at Breakout EA, I'm only going to go long. Why? Because the whole edge of this strategy is you don't know which way it goes. You go with momentum. You can't filter momentum. Momentum is momentum. This is momentum long. You can't filter that. It's happened. So you can't do that. I mean, you try it. You can do it. I mean, test it. AZ, all these you come up with different ideas every day, which is great. Test them. Stick them in the strategy tester. See what happens. Answer your own questions. Best way to learn. Do it yourself, and you'll figure it out. You'll figure out what is and isn't good to do. So I'm taking another aggressive on the US dollar yen on the 15-minute reversal, which is basically the top of that propulsion gap. It's either going to bounce and it's going to be a small loss, or it's going to come down. If I can get that into profit and we get some overnight Japanese news, could be a big payday. We will see. So there's lots of RSI extensions obviously to get into. So full marks on your diplomacy. Who am I being diplomatic to? I don't even know, but I'm being I can't even say it. I don't even know when I'm being diplomatic. I just like getting your thoughts on stuff. The trouble is, though, AZ, I don't know. You're asking, I don't know. Is it better to... I have asked this question 1,000 times in 15 years. Yeah. Is it better to use this or this? Is it better to use a 21 or a 14? Is it better to use an RSI or a stochastic? Is it better to use a CCI? Is it better to use a bearish engulfing, or is it better to use a shooting star? Is it better to use a 9 moving average or a 20 moving average? Yeah, The answer to every single one of those questions is yes, sometimes, no, sometimes. Because sometimes that shooting star is the one you want. Sometimes that shooting star is a fake signal. Sometimes that 9 cross gets you in too early. Sometimes if you'd taken the 20, it would have worked. Other times, if you took the 20, you should have waited for the 50. Sometimes taking the 70 was exactly the right thing to do, but other times the 80 was best. At the end of the day, there is not one indicator on this planet that can predict the future. I have no idea if adding a moving average will make something better or worse. But if you backtest something, it comes out with 20% profit, and you backtest it with a moving average filter and it comes out with 35, use the moving average filter. But just be aware, that period you tested in, those conditions were correct. Next year, you may not have the right moving average. You should have used, instead of a 9, you should have used a 20. Or you shouldn't have used a moving average next year. Yeah, this is what robustness testing is all about. You'll find when you do robustness testing, it tells you one thing. Everything is random. Yeah, I can test a strategy with 100 different variations of an indicator. If they all come out, or 60 to 70% of them come out profitable, there's an edge. However, there is that 30 to 40% that don't make money. Which of them are you going to get next year? Nobody knows. This is the thing, isn't it? You know, you can backtest. Like, look at exactly what's happened to me today. Yeah, I backtested this strategy. Not long. I backtested it over the last couple of months. Basically, I scrolled out, went back, last couple of months, looked at it, 60, 70, it was actually just over 70% strike rate on the RSI. What happened today? Double margin call. Has the conditions we've got today happened in the last 2 months? No. It looked absolutely perfect on paper for the last 2 months. Today, totally different conditions. You're never going to get the same thing happen twice. I will say I once passed a funded account by taking the opposite trades from the ORB break. Yeah. Yeah, it's 50-50, David. Yeah. When you get a reversal alert, it'll either go long or short. Is it sinking in yet? Nothing works. You just got to have a strategy and a system that works a percentage of the time. That's it. It's not about how you get in. You can flip a coin and pass a proper valuation, but if you flip the same coin next week, you'll fail. The only reason you pass is if the market moves in the direction you flip the coin in the day that you flip the coin. Today, I flipped the coin and said, I want to take a high-risk strategy, which has proven itself over 2 months. Today, the market went, conditions are different. I flipped the coin exactly the same way as the last 2 months. Today's coin flip failed. However, by the end of today, this could be sitting in 50% of profit. In which case, then I've just made a 40% profit today. That's all. What's going to happen? Tune in tomorrow morning. We'll find out. I have no idea. Look at this trade here, 2.46%. When that hits target, that'll be 5%. When that goes down to there, that becomes minus 5.65. When that one there pushes by half an ADR in the next hour, that way, that will become 5%, and this will become negative 0.65%, and a load of that will be sitting in green. Yeah, that's the difference between now and 1 hour. I have no idea what it's going to do. Neither do you. And it doesn't matter what filter you use, whether it be a moving average, whether you take a reverse alert or you don't take a reverse alert, whether that becomes profitable or not is purely down to the market and the candlestick. There's nothing we can do to control it, is there? Lee, you know everything. I know nothing. That's the whole point. I just admit that I know nothing and get on with it. Stop looking. You've got to stop looking. That's it. You just got to stop looking. Probably the Japanese kid that invented Bitcoin made the earthquake machine. Quite possibly. If we think it is a Japanese kid. We don't know, do we? This is the thing. So we need AI to adjust the indicator every time to fit the trade. That's called a backtest. That's a backtest. So you go in here like this, right? And you press the button, right? And you run it. And you run it for, I don't know, I'm going to run it until the 7th of January, and then I'm going to stop it. Stop it there, right? So it did $44 in profit. Okay, so we go into the EA and we change that to 1.5. We change that to 0.25. Press the button again. We do the same test. We made $44 last time up until the 8th of the month. Let's run it again. Stop it about the same time. Something like that. This time I made $149, which is best. The second set. So what shall I use tomorrow? The first set or the second set? Which of those is going to produce more profit tomorrow? No idea, because tomorrow hasn't happened. Over that period of time that I just tested, those 6 or 7 days, it was better to use 1/4 of an ADR between entries and a 1.5 lot multiplier. Those are the only two variables I changed, and I trebled my profit. Pure fluke, pure luck, pure gambling. None of that makes any sense tomorrow because tomorrow hasn't happened. None of those settings I just used are going to work tomorrow. Or are they going to work? I don't know. We'll find out. You have no way of telling the future. This is the thing you've got to just accept. As soon as you accept that, you just press the button and let it go. And then you wait for it to go green, and then you put it in the green pot. That's it. That's all you can do. And if nothing else works, Agamat. Exactly. Except Agamat really doesn't work, does it? That's the most curve fit thing in the world. That is exactly that test I just done, where he got up to 140, and then he used 140, and he ran the same test again with another setting, and if it didn't go above 140, he wouldn't use it. And then he ran another test with a different setting, and it went to 195. So he starts there, runs it again, until he gets that curve fit perfectly. These are the settings for this month for the EA. Every month you get a new set of settings. Why? Because all it's doing is what worked last month, we'll try that. What worked last month, we'll try that. That's what all the back tests you see everywhere are. Curve fit crap. None of it works. Because tomorrow's different. Especially with things like Agamat. Each indicator has a resonance harmonic frequency. You have to see what one resonates with you on the second full moon of the 3rd month to find out. Thought everybody knew that. That's about right. This is what I keep saying. If you want to use an RSI, like I do, use an RSI. If you don't want to use it, use a CCI. If you are absolutely addicted to stochastic indicator, use stochastic. None of them are any good. They all do the same thing. They teach you that the market's gone up. I know that. I saw it. Does it mean it's coming down? In that instance, yes. What happened afterwards? It went up again. So what should we do now? Sell it. Okay. What's going to happen next? No idea. Doesn't matter if you use the RSI, the CCI, or the MACD. They all told you the same thing. It went up. Does that help you in any way, shape, or form? No, but it does give you a reason to get in. And you can't make money if you're not in the market. So all you need is a condition and a signal to tell you to get in. That's it. What happens after that? That's your job. See what the candlestick does. Other than that, lick your finger, hold it up, see which way the wind's blowing. Can you show us your financial juice news settings? There aren't any. It's just standard. I've never touched it. I want FX news, earnings news, Bloomberg. I mean, I have never really touched it. Get what you like in there. News is news. I'm just interested in FX mainly. Fundamentals, that's what I want to know. Stuff that will fundamentally affect direction. I have stocks in here because the only reason I really have stocks in here because it reminds me that earnings fortnight is on. And I keep forgetting earnings fortnight because it's only once every quarter. So every now and again, I see a stock pop in there and I go, oh, must be earnings. Because earnings fortnight actually starts 2 weeks before earnings fortnight. You start getting major stock releases. They hit this before earnings fortnight starts and it reminds me to look at it. It's the only reason I use it. I don't pay any attention to what the stocks are doing because it's got nothing to do with anything. The momentum will happen when the momentum happens. So you're not in control of that. NASDAQ off to 3R. Dow is starting to pull back. S&P is just a flip-floppy mess at the minute. And the FTSE is retesting the low of session. Curve fit crap EA has a ring to it. Yeah. If I released, this is the thing. If I released something, if I built something at random and called it the curve fit crap EA and put it on the marketplace, people would buy it. Wouldn't they? Because they buy everything. They buy anything. They try everything. This is the thing. This is why I don't. I could build literally hundreds of EAs and push loads of hundreds of EAs out there, all with curve fit back tests, and make a fortune selling EAs. But that's what I did. I spent a long time buying crap. So I have absolutely no intention of pushing crap out there. If I'm not going to use it myself, it's not going out there. Which is why I have very few products, because 90% of it is just crap. 99% of it is just crap. I just stay in line with the daily trend for my entries. It's been working great with pullbacks triggered by the ADR 150 extension. Cool. That will work sometimes, most of the time. You just won't get many entries. This is what I'm saying. This thing here is running high probability setups. What you've just described there, Stephen, is a high probability setup. Staying in line with the daily 24.72 moving average and taking 150 ADR pullbacks to the downside. Very good entries. You won't get many, but when you do get them, they will work probably very quickly and with a very high profit factor, because you're getting in on those 24.72 pullbacks. But they will only work in a trend. So, you know, that one there is a 150 ADR. 123. ADR is 56. So that's 150 ADR. Yeah. That was your market reverse alert short on the 5-minute time frame. Look at what you got. Brilliant strategy. But look how many entries you've had in a month. One. But it worked with 100% accuracy. Same way as when you get the extensions on 80-20 on the 4-hour and the hourlies. Super high strike rate. But you don't get many. That's the payoff. You're much better off taking less signals, which are more reliable, than getting it all the time. But that's very hard to do to make a consistent, regular income. What do I think of Admiral Markets? I've never used Admiral. Aren't they insurance? My car insurance is with Admiral. That's Admiral Insurance. I've never used Admiral. I don't know. Job is a job. Nothing works without work. Exactly. Say fish and chips. But say it while pretending to be Boris. I can't be Boris. Fish and chips. I can't do Boris. I can't do his accent at all. He's just a bumbling idiot, isn't he? Right. That's all he does. Putin. Don't negotiate. Don't negotiate. Keep invading. Keep invading. Apparently that's what he said. Used to Boris. Used to the rest of us. But apparently that's what he said to Putin. According to Putin. Putin's always right, obviously. Admiral is a good broker, yet some spreads are large. You'll find that with all brokers, spreads are large. Variable spreads. Look at the NASDAQ. Look, nearly undone the entire move. 150 ADR. We've just pushed up 1 ADR from there. 239 is ADR. We've pushed up 204. So it's starting to undo some of this US potentially. So we've come off of 200 ADR on US CAD. US Swiss is stalling. US dollar yen stalling. Pound yen not quite there. Euro US dollar stalled at 150. Doesn't mean this move is over. It means we've stopped for the moment. So I would not be surprised to find us back up here by dinner time tomorrow. Thought I had the wrong channel. Computer crashed again. Came back to fish and chips. Boris grumble grumble. You're going to have to stay indoors, lock the doors, do not leave the house, do not earn any money, send the economy into absolute chaos. I've merged into Prince Charles. How did that happen? Bored. Right, I'm going. So we will try and unpick all this tomorrow. There's absolutely no point in looking at anything while this crazy move is ongoing. So there's lots of opportunities to get into stuff. The vast majority of this will be just normal in drawdown. So anything you can close out, but there's not a lot really to close out at the moment because nothing else has moved. It's really only this US dollar, and it's not really necessarily a move because it's just undone what we've had done in the last week. If you look at where we actually were this time last week, well, actually sort of mid last week, we're only back to where we were mid last week. So we've basically gone nowhere, had a move, gone nowhere, pushed up, undone it. So all that's happened really for me at the moment is my yens have gone into more drawdown. That's it. Everything else, as you can see, is just sitting there doing nothing. It looks like a very bad picture at the moment because I'm stuck in the yens and I've got aggressive drawdown control being done, but there is nothing I can do about that. Just about to stop out on that one as well. So just keep your eyes peeled basically on the news overnight and watch out for that yen intervention and see if we get the Japanese talking overnight. I'd be very surprised if we don't get something overnight. This is our first time back to 150 on that US dollar yen, so they will be monitoring closely, as they say. So if you're in any of the I'm going to re-hedge on this thing again. Ignore that figure, that's not right because I've banked manual. That's monitoring the EA moves, not the manuals, so it looks worse than it is. So yeah, if you're in any of these US ORBs today, it's going to be quite tricky to do anything with them. This one obviously would have hedged and gone long, or if you took the ORB, well done, you're 3R. But just watch for that move to get filled, and then potentially they'll pull back. So if we can get back to origin, that's where it'll probably stall out. With these, I mean, you've got a massive move, half to 3/4 of an ADR up just to get back to resistance. So they're really, really hard to trade, which is why I didn't bother today. So we'll come back and look at those tomorrow as well. Funding next paused US customers. Yeah, they're all going to the pan, basically. All getting caught doing naughty stuff. So there's some regulation they're breaking, which Meta quotes, and I'd imagine the SEC are putting pressure on. So I'm surprised we haven't had anything out of the SEC yet. but I would imagine we will see something come on the CFTC website. If they are involved, someone's putting pressure on somewhere on these prop firms, and either on MetaQuotes or MetaQuotes are putting the pressure on. But there doesn't seem to be anything on here about prop at the moment. Proposed, proportional. Yeah, it's nothing about prop there at the minute, but wouldn't be surprised if we get something soon. Monkey ballers is sounding more attractive. Yeah. I think that is a very good idea. We should be using monkey ballers. Come and join our prop firm. We will guarantee to pay you out within 1.5 minutes of you hitting your 2% target with a 50% drawdown. But you cannot trade on a day with Y in it, and you can't go long or short. Other than that, we are guarantee you we are the best prop firm out there. Come join us. Right. I'll be back tomorrow. So I'm not here Thursday or Friday. I'm off this week because it's half term. We're doing other stuff. So be aware of CPI tomorrow morning. We've got another big one potentially tomorrow. If that comes out as a big miss, this market's going to be in utter turmoil tomorrow. We've got Bailey speaking tomorrow afternoon. So he may be able to calm down whatever happens in the morning, but he might also give us an indication of the opposite of what we got told today, that they're pushing the rates back. I'm not sure they are. So we'll see. But be aware of that tomorrow. Big mover potentially tomorrow morning before I come on. So I'll be on at 7:50 tomorrow morning. We'll have a look at the open of Frankfurt and see what impact that's had on the FTSE. That's going to impact the FTSE tomorrow morning. And then it's basically waiting for next batch of US news, which comes on Thursday. So this will either be undone tomorrow, or it could even be undone today. You never know. But I mean, or it's going to be a continuation move. But we need some information coming out of the Fed and out of Bailey, basically, for the pound before we can make any decisions. So need this just to calm down, settle, and then we can see where we are tomorrow. And we can plan from there. So I will be back tomorrow morning, 7:50, same time, 2:20 in the afternoon for New York. Anything you need, I'll be in Telegram. Other than that, have a good one, and I will see you guys next time.